We hear that BlackRock is really actively pursuing building on the Ethereum blockchain. We hear that Deutsche Bank is doing that. We hear that Visa is doing that. So all of a sudden you're like, wait, I know these firms. I know what they're about. I know what they're doing. So I think it's just a slow momentum, but it's catching fire, which is what we're witnessing right now.
Hi, everyone. I'm Andy Baehr, and this is your Markets Outlook. I'm joined today by Cinthia Murphy, investment strategist at TMX VettaFi. Cinthia, how are you?
Hey, Andy, I'm great. I'm excited to be here with you today.
Thanks. It's good to see you too. So I keep having these weird experiences where really deeply knowledgeable finance people are either still not acquainted with or squeamish about crypto. Where do you think we are in the education cycle?
I think we are everywhere in that education cycle. I think from 0 to 60, you have every level there. And it really depends on where you're navigating, where you're earning your keep in that financial world. It's interesting because I think, unlike a lot of things in the financial world, you see a lot of expertise among the retail, the do-it-yourselfers that are out there hustling the information, keeping up with the innovation. And then the advisor channel is a little bit slower to catch up. I mean, they have a different mandate. Most of them are fiduciaries, so they have to really tread carefully because they have to answer to that client at the end of the day. And then you have the big institutions that move at their own pace. Some of them are really, first to market to adopt things, but a lot of them have really long-standing also mandates. They answer to different people. So in that spectrum, you get all levels of expertise. And really, I think at this point, especially when it comes to Bitcoin, a comfort level with the space. Just, okay, I understand that I may not understand everything, but I'm okay tapping into this category. So it's been really interesting to see that evolution.
For sure. And I guess we all feel like, well, let's talk about advisors. When you talk to a room full of advisors and you're talking to them all the time, I think some of them feel like, am I too late? And some of them kind of are feeling, well, am I too early? Do I want to devote the time to this now? And some of them don't even have access to product yet, right? But they may have customers who are looking at headlines, especially these past couple of months, and thinking, why are we not allocating here? So how have the yard line markers moved for the advisor community in terms of the business that they're in, the demands that they're in? Do they risk get caught being too early, but then suddenly too late?
Yeah, it's a great question. I think, from the advisor perspective, where the bar really moved, it went from a risk of I jumped too early and then it all crashed and my clients lost money and now I have to answer for that, to now being a reputational risk. If I can now have a conversation and really explore this category with my clients, then it hurts my reputation as a financial advisor. So I think it really moved the bar on really pursuing education and understanding of this category. I think risk continues to be a big concern. And just basic understanding. We recently did a poll of VettaFi with a bunch of advisors and asked them, what is the biggest hurdle here to adoption for you today? I give different categories. I'm worried about custody. I'm worried about different things. And one of them was just better understanding of the crypto category. And over 50% of them said that was their number one problem.
We've got to work harder, Cinthia.
So we got to go 24/7 in.
Right.
We got to keep going. But the thing is, it's a space that's innovating so much all the time. You feel like you finally learned something, and then even the language changes and then different things change. So it's really difficult to keep up. Total respect for the advisor on that. I struggle to keep up. It's a moving target. But it's been interesting that we're still building that base. But again, I think it's important to remember this is a person who has to sit in front of a client and have an intelligent conversation about an asset class that is relatively new and enough to advise, put money here, put money there, make investment decisions. So it's a big hurdle. You have to really have good understanding of it.
I want to ask you a question about Bitcoin in particular, and then I want to talk about Ether and how the rest of the asset class has been rallying this year. When it comes to Bitcoin, we're 18, 19 months into having ETFs, and 6.5%, 7% of all Bitcoin is now held in wrapped products or some huge statistic like that. The thing is, Bitcoin used to be a 100 volatility asset, right? And now even implied volatility in options is below 30. So it's a Bitcoin's about as volatile as a happy stock right now, right? So, as your potential user base who was maybe afraid about Bitcoin's huge risk properties, have they kind of followed this volatility path and realized that Bitcoin's risk profile has changed so dramatically in the last year?
That makes sense. And I think it's this constant conversation about correlations. People talk about Bitcoin as digital gold. So you go into that gold territory mindset. But then it behaves more volatile than stocks sometimes. And you go, wait, this is a super risk asset. And so I think it took time for us to understand that is neither of those sides purely. It's a little bit of, different things, and it's its own asset. And so I think this taming of volatility a little bit and the adoption of ETFs have really mainstreamed this a little bit more. ETF as a structure is a product we are comfortable with. If you can access Bitcoin through ETFs, I think it inspired some confidence as well. And that just really helped to democratize that access to this category in a way that may have been slower in the advisor channel otherwise.
I've got some great ETF questions, but I want to talk about not ETFs, but ETH first. Ether has been responsible for 50% of the rally of our benchmark of our flagship indices here at CoinDesk. Ether ETFs got off to a slower start. I think there was a lot of education and narrative that had to be picked up, but stablecoins seem to have led the charge in making Ether seem a little bit more accessible from a narrative point of view. Are you getting more questions about ETH? And do you think that people are getting some comfort into crypto's second biggest asset?
So I think yes. The answer is yes. To put simply, I mean, we have over $10 billion in inflows into Ether ETFs this year, and it's a brand new category. I remind myself that it took us more than 10 years to get approval of this spot Bitcoin ETF. So it's almost like we had 10 years to have this conversation and prepare. And then we barely hit there and boom, Ether ETFs on top of it. So all of a sudden, I feel like it's an exponential demand on that education hurdle. So I think we're slowly getting there. I'm not surprised it was a slower uptake. But I think the story too is so different because Ether is really a story about utility, where Bitcoin is, centers on that store of value, the different kind of use or fundamental value, if you will. So again, it's just let's start from scratch and now build this kind of understanding. I think what has really moved the needle in this third quarter, we're already in the third quarter, which is crazy to think about that, has been the ETFs coming in, this institutional support we keep hearing about. As we, on the advisor channel, we don't really understand what does it mean to be really tokenizing real assets, but we hear that BlackRock is really actively pursuing building on the Ethereum blockchain. We hear that Deutsche Bank is doing that. We hear that Visa is doing that. So all of a sudden you're like, wait, I know these firms. I know what they're about. I know what they're doing. So I think it's just a slow momentum, but it's catching fire, which is what we're witnessing right now.
Midnight is introducing a novel approach to token distribution. The Midnight Glacier Drop is the first in a multi-phase distribution of the Night token aimed at empowering a broad, diverse community to secure the future of the Midnight network. Holders of ADA, BTC, ETH, SOL, XRP, BNB, AVAX, and BAT are eligible to participate in the Glacier Drop phase. Help usher in the next generation of blockchain with rational privacy and cooperative tokenomics on the Midnight network. To learn more about the Midnight Glacier Drop, visit midnight.gd and claim your night.
So now advisors, we could have a couple of outcomes by the end of the year. We could have a whole swarm of single crypto asset ETFs in the United States. They could be approved, they could be launched. We also have a couple of multi-asset index products like the Grayscale Digital Large Cap Fund, which are under the SEC's on their list for potential uplisting approval. Do you think that that might make the advisor's life a little bit simpler to apply kind of traditional asset prudent investment practices to crypto and say, you know what, I'm not going to force you to pick. I'm not going to pick. We're not going to pick. We're not going to time. We're going to go for a market portfolio. And that way you get access to all the good stories, but you still get representation to the asset class. How important will that be to the advisor community, do you think?
So I love that question. It's very intriguing because as a hypothesis, I would say, yes, of course. I mean, ETFs are built on the concept of diversification. Don't try to pick the winner, invest in the whole market. That is the ethos of the ETF structure. On the other side, you also have things like if you watch the Magnificent Seven, we're all like, forget diversification. People are just buying up the 7 names because the returns have been there. And so you kind of forget about the importance of diversification until you need that diversification when the leadership falters. So I think it's a great innovation. I'm excited about it. I think it's a great tool. I'm a big believer in diversification, and especially in the concept of a new asset class with so many different coins, so many different storylines. As a blanket, I'm just going to own them all and not bet on the winner is a really smart, reasonable approach to me. I'm sure there will still be folks just trying to pick their favorite horse and sticking to that race.
Right, right. I wish we had much more time to talk, but that's all the time we have today. Cinthia, thank you so much. Great to talk to you. I can't wait to talk some more.
Same here. Same here. Thank you.